The news you read is not a signal to act, it is a receipt for a transaction that has already happened. The headline that makes your heart race with greed or fear is the final act of a play that began weeks ago, and you, the public, are invited in only to applaud the finale and pay the actors. The intelligent speculator does not concern himself with the words printed in the paper. He concerns himself with the letters and numbers printed on the tape. The price is the truth. The rest is public relations. You believe that knowledge is power, that if you could only know the news a few seconds before everyone else, you would be rich. This is a fundamental misunderstanding of the game. The great fortunes are not made by acting on what is known, but by acting on what the market itself reveals. The behavior of a stock is the only reliable inside information you will ever get. Everything you need to know about a company's prospects, a sector's health, or the economy's direction is being written second by second in the flow of prices. All my success and all my failures can be traced back to this single principle. Whether I listen to the clear voice of the tape or the siren song of news. If you wish to understand the full scope of the lessons I paid millions to learn, they are chronicled in the book Reminiscences of a Stock Operator. I suggest you acquire it. The link is in the description of this video. It is the cheapest tuition you will ever pay. Let me tell you about a time when the world was on fire with news. It was during the Great War, a time of immense volatility and uncertainty. I was heavily short the market, convinced that the bullish enthusiasm was unwarranted. The trend was with me. One day, a rumor of peace, a false one as it turned out, flashed across the private wires. The market, which had been teetering, plunged violently. It was a panic. A man trading on the news would have thought, "Peace is bullish. This is a buying opportunity." But the tape screamed, "Selling." In a panic, you do not argue. I covered my entire short line, banking a significant profit. The first lesson is simple. When the market moves with force, you move with it. You do not stand in front of a locomotive with a theory. Now comes the part that matters. A short while later, the rumor was officially and authoritatively denied. The news wires declared it a fabrication. Every newspaper in the country would blare the headline, "Peace, rumor false." What would the average man do? He would think, "The market dropped on a false rumor. Now that the truth is out, it must rally back twice as hard." He would mortgage his house to buy stocks, convinced he was acting on a certainty. This was the most bullish news imaginable. The obstacle that caused the plunge had been removed. A powerful, immediate rebound was not just expected. It was considered a law of nature. I watched the ticker. In modern terms, I watched the price chart on my screen. I saw the opening. And I saw nothing. There was a brief, anemic flurry of buying, but it was pathetic. The market tried to rally and failed. It tried again and failed again. The immense buying power of the public, fueled by the sensational good news, was being met by a silent, invisible wall of selling. Stocks could not lift. They churned, they struggled, but they could not advance. That was the only signal I needed. The market's inability to rally on overwhelmingly bullish news was the single most bearish piece of information in the world. It told me that the underlying condition was rotten. It told me there were enormous sellers hidden in the wings who were using the public's buying as an opportunity to unload their holdings without breaking the price. The good news gave them the perfect cover. I immediately re-established my entire short line, selling even more than I had before. And in the days that followed, the market collapsed under its own weight, far below the lows of the initial panic. I made a fortune not because I knew the news, but because I correctly interpreted the market's reaction to the news. This is the central law. The news itself is meaningless. The market's response is everything. You must treat every news event as a test of the market's internal strength. If a stock receives a glowing earnings report and the price barely moves or even sells off, the trend is over. the insiders have already sold. They are distributing their shares to the hopeful amateurs who are just now reading the headline. Conversely, if a company reports terrible news, a lawsuit, a failed project, and the stock refuses to go down or drops briefly and is immediately bought back up, it is one of the most bullish signals you can receive. It means the stock is in such strong hands, under such powerful accumulation, that all the bad news has already been discounted. The sellers are exhausted, and the buyers are absorbing every share they can find. This principle works because the market is a discounting mechanism. It is not reacting to today's news. It is attempting to price in all the news for the next 6 to 9 months. The men with real capital, the operators of pools and the directors of corporations, do not wait for the Associated Press to tell them how their business is doing. They know months in advance. Their buying and selling, long before any public announcement, is what creates the primary trend. When you see a stock begin a slow, steady advance on increasing volume with no news to justify it, that is the footprint of smart money. They are accumulating. The news that will eventually be released to explain the move is simply the advertising campaign to draw in the public so the insiders can sell at a profit. Consider the great San Francisco earthquake of 1906. I was on vacation in Atlantic City, disconnected from the hustle of Wall Street. But I felt a sense of unease. The market, from what I could gather, was acting heavy. It was not responding to bullish developments as it should have. This is a feeling a man acquires after years of staring at the tape. It is a subconscious recognition of unhealthy price action. I took the train back to the city and went to my brokerage. I did not need a reason. The tape was telling me something was wrong. Stocks that were supposed to be leaders were lagging. The rallies were weak, and the declines were sharp. The line of least resistance was clearly pointing down. I began selling short, focusing on Union Pacific, a market leader. I had no specific negative information. I was acting purely on the behavior of the market itself. A day later, the news broke. A catastrophic earthquake had devastated San Francisco. The market plunged into chaos. My position was now immensely profitable. Did I predict the earthquake? Of course not. But the market did. The immense liabilities of the insurance companies, the disruption to commerce, the destruction of wealth, these forces were going to impact the economy. And the smartest money in the country began to quietly sell their holdings in anticipation of some kind of trouble, even if they did not know its specific form. Their selling was what made the tape heavy. Their actions created the signal I read. The earthquake was the spectacular headline, but the verdict had already been rendered by the price action days before. The amateur waits for the story. The professional reads the tape. The most dangerous news of all is not public but private. It is the inside tip whispered in your ear by a man who is supposed to be in the know. I learned this lesson at the cost of millions in the cotton market. I fell under the spell of a man named Percy Thomas. He was considered a king in the cotton world, a brilliant statistician and a charismatic bull. He had every fact, every figure, every piece of fundamental news to prove that cotton was destined for much higher prices. He believed it with all his heart, and his conviction was infectious. Against my better judgment, I listened to him. I ignored what the tape was telling me. The price of cotton was not acting right. It would rally feebly and then sink back. It showed all the signs of distribution by intelligent operators. But Percy Thomas had an explanation for everything. The price weakness was temporary manipulation. The fundamentals were undeniable. I held on. I even averaged down, violating a cardinal rule because I was hypnotized by his narrative, by his news. The result was inevitable. The market, which knows more than any single man, continued its decline. Percy Thomas was ruined, and I suffered one of the worst financial blows of my life. I had abandoned the only thing that had ever made me money, my own reading of the tape in favor of another man's opinion, no matter how well informed that opinion seemed. He He wasn't lying to me, he was lying to himself. He was so immersed in his bullish news that he could not see the truth of the price action. The market was telling him he was wrong every single day, and he refused to listen. This is why you must achieve a state of intellectual isolation. You cannot trade effectively while listening to the opinions of others. When you take a position, you must do so based on your own dispassionate analysis of the facts as they are presented on the chart. The moment you let another's opinion or a newspaper headline influence your judgment, you have lost your edge. You become part of the crowd, and the crowd is always wrong at the turning points. So, how does a modern trader profit from this public ignorance? You must build a system based on these immutable laws of market reaction. First, you must reframe the purpose of news. News is not a trading signal. It is a volatility event. Your job is not to guess the news, nor is it to trade the headline. Your job is to wait for the news to hit and then trade the market's confirmed reaction. Before a major announcement, like an earnings release or a central bank decision, the intelligent course is often to have no position at all. Why gamble? Let the amateurs and the algorithms fight it out in the initial chaos. Your opportunity comes in the hours and days after the news, when the true character of the market reveals itself. Second, master the art of the failed move. The most powerful signals in the market are failures. A failure to rally on good news is a signal to go short. A failure to break down on bad news is a signal to go long. This requires patience. You must wait for the test to occur. The crowd will jump in on the headline. You will wait and watch to see if their buying can sustain a rally. When you see it sputter and fail, that is your moment to act, with the wind at your back. Third, always respect price action over narrative. You will hear compelling stories. You will read brilliant analyses. You will see experts on television who speak with the utmost confidence. Ignore all of it. Bring up a chart of the stock they are discussing. What is the price doing? Is it confirming their story? Or is it telling you something different? If a man tells you a company is a revolutionary force for the future, but the stock has been trending down for 6 months, the market is telling you the story is a lie, or at least that it is not yet true. There are only 2 pieces of information that are pure and unfiltered: price and volume. Everything else is an opinion. Fourth, understand that news is often a tool for distribution. When a stock has had a long and powerful advance, the insiders and large operators need a way to sell their immense holdings without causing a collapse. How do they do this? They wait for the perfect piece of news, a record-breaking quarter, a new product announcement, a stock split. This news is blasted across every media outlet, creating a frenzy of public buying. The amateurs rush in, eager to get a piece of the sure thing. This wave of buying is the liquidity the professionals use to sell. They are happy to hand their shares over to the public at the top. The headline you think is a reason to buy is in fact the receipt for their sale. You must operate as a contrarian, not to the market, but to human nature. When everyone is euphoric over a piece of news, be skeptical. When everyone is panicking over a headline, be opportunistic. But your skepticism and your opportunism must be confirmed by the tape. Do not short a stock simply because the news is good. Short it when the good news fails to lift the price. Do not buy a stock simply because the news is bad. Buy it when the bad news fails to sink the price. This is not a simple game. It is a lifelong study of mass psychology, reflected in the simple dance of numbers on a screen. The public will always want a story. They will always crave a reason, a justification for a market move. This creates a permanent structural weakness in their trading. They are reacting to yesterday's events. You must learn to act on today's reality. The tape tells the truth. The headlines tell a story. In this business, you get paid for knowing the truth, not for believing a story.